What's up everyone, my name is Todd. I'm a trader and investor from the UK, and this is a question I get asked pretty much every single day, and it is why you fail as a retail trader. And to be honest, it's quite simple if you actually put the evidence together. Now, you've probably clicked this video because you've blown up your account, followed signals, followed a Forex course or something along them lines, which is you've learned that is absolute nonsense and you've ended up just losing a lot of money. Or you've learned how to plot some technical analysis, which it's relevant to a certain degree, but not as much as you think. I mean, it's probably worth 20% of actually what trading's worth. It's probably 80% fundamental, 20% technical, and when you put this all together, yeah, you've probably learned absolutely nothing. You've learned how to plot some lines that don't make any sense. Now, the funniest one I think is people think that they try and say a magic indicator or some sort of crappy indicator, and you buy and sell when it moves in a certain way. It's just nonsense. Like go on to any trading floor or behind the scenes of any professional trader, and guess what? You'll see none of this indicator crap. Why do you think this is? Like, you actually have to think about why is that? It's simple, because it doesn't work. It's not difficult, really. If there was a magic indicator, don't you think that everyone would be using it? 90% of retail traders lose money. Those are the facts. And this is probably the worst thing about all of this, is the first thing people do is when they want to learn how to trade, is they Google it, don't they? Or they YouTube it, or whatever. And now think about it. On the left-hand side of Google, the SEO, the search engine optimization, there's the brokers who are against you. And on the, should we say, the right side of things is the paid side, which again is against you. Those are the trading educators and whatever that don't really give a shit if you lose money or not. So in general, the whole retail industry is against you from the get-go, and it's just a massive conflict of interest. And so literally most people are, should we say, on the right hand side of things, these trading educators, you'll see their adverts all the time, and that's the reason is they're still there, is because you guys are making them actually profitable from their advertisements. They profit, so that's why their advertisers are always there. It's just mental. One thing we need as a trader is volatility, and volatility is king as a trader. Without volatility, we've got nothing. This is the problem. We've got market participants, which equals more liquidity, which equals less volatility, which then equals less opportunity. So you're kind of stuffed. So what this means is there's more willing buyers and sellers at each given price. So volatility is a lot less, so a lot less money is made. So essentially what I'm saying is if there's an infinity amount of buyers and sellers on an asset and the asset doesn't move, there's no volatility, so the trader on the certain asset class can't make money. It's kind of funny, I see all the time about day trading, or scalp trading in industry terms, is basically non-existent given what I just said. You have to think about it long term. This is why day traders haven't been making a lot of money, because of the volatility is so low. The opportunity just isn't there. So when you see it all the time about these Forex day traders or scalp traders making millions, especially on Instagram, whatever, it's just Now, most people watching this video are trying to make FX an income or a secondary income, and they got drawn into the fact that you can make money daily from FX, as there's so many day traders that you'll see are actually doing it, and unfortunately it's nonsense. Unfortunately, trading in general isn't a get-rich-quick scheme, and people view trading, or especially day trading, as a form of getting rich quickly. It just doesn't exist in the real world. As some advice from a profitable trader like myself, you need to do what the market tells you to do, not on the other flip of the coin. So I get this question a lot regarding the fact that someone is a day trader and how can I help them, and I just think it's the most stupid question you can ask. Reason being is you're essentially saying you trade one asset class on one time frame. I'll give you an example that you trade GBP to USD over the next, let's say, 200 trading days or something like that, and it sits at 124. So you buy at 124 and sell at 124. Can you make money like that? And the obvious answer is no, you can't. So people will literally sit there for, like, let's say them 200 trading days saying, I am a Forex day trader or a scalp trader. And obviously they don't make money. They don't actually move with the times. It's just barbaric. Financial markets is all about opportunities, and they've limited their opportunities instantly because they're trading one asset class over one time frame. That's why I would say in sort of the next 1 to 2 years of you, should we say, first starting out trading, you need to get yourself a proper education and learn how to trade everything, so you can follow the volatility or predict where the volatility is or going to be. You have to go where the money is. The point behind all of this is you're doing a strategy in one asset class and it stops working. Let's say you can shift to another instantly, and if that doesn't work, you can move to another one. That means you have options. It's like there's no point limiting your opportunity in the markets, otherwise you won't make any money. Now, I touched on this at the start of the video, but most of trading is fundamental, so you're trying to predict things that are happening, should we say, well north in the future. And it's generally laughable when you see loads of people plotting technical analysis that fib retracements and all this stuff that actually means nothing in the real world. It just looks cool. So as a retail trader, you have ridiculous expectations of yourself, which you'll always fall short of, always, which will lead to you blowing up your account, which in terms is called capital destruction. You'll have very concentrated risk on very few positions, probably 3 roughly most of the time, and you're trying to make big money from like catalysts like the NFP, the non-farm payroll, which is literally taking a guess on which way it's going to go a few seconds after it's announced. And professionals have a good idea of what the number's going to be months in advance, and if it's lower or higher than consensus, they use, should we say, liquidity from the retail traders to get out. This is a food for thought for most retail traders, is professionals use a mixture of long and shorts in their portfolio, like usually 10 plus positions across the board. Going back to what I said about retail traders having unrealistic expectations, professionals, all they're really looking for is long-term consistency. They want to trade until retirement or trade until they die. Retail is capital destruction, professional is capital preservation and growth. There's a difference between taking losses in your portfolio versus allowing a position to become catastrophic and hurting you that way. Some of my best trades have been losing ones, and probably again people thinking or watching this thinking, what is he on about? What do you mean losing ones are his best trades? And it's because I got out at the right time, meaning that I lost a bit of money rather than a large sum. I mean, there's been some positions that I probably would have lost like upwards of 100k per position, and clearly that's not where you want to be. The targets of a retail trader are simple, really. They have unrealistic targets, they stay poor, their expectations aren't met, and eventually their accounts blow up and they give up. Professionals have realistic targets, they get rich slowly. That's the most important thing you've got to think about. Expectations are met and they trade forever until retirement or they die. As I said, if you actually think about the logistics behind it all, that's how it works. Most retail traders will lose all of their margin within 3 to 4 months of trading, which is quite a scary statistic. What you have to think about is, as a retail trader, is everything is against you. I think you have to view the market and almost be slightly aggressive towards it, as people all over the board are trying to take your money. So with that being said, you have to keep your emotions in check and move with possessions the correct way. The retail industry wasn't designed for your benefit, it was to put your money in other people's pockets. Everything has been designed against you, and this is the reason why 90% of retail traders lose money. So there's probably some smarter people out there thinking, well, if 90% of traders, like retail traders, lose money, if we take the other side of it, we'd have a 90% win rate, which is correct. There's literally systems in place, so you have to think about it, like people are incentivized to get you to sign up because they'll take the other side of your position and they'll win 90% of the time. It's starting to make sense now. An immense amount of time is taken every single week, put into fundamentals and aspects that you need to look into for then you to become a successful trader. It isn't a get-rich-quick scheme at all. If you fall in love with the process, the money will follow. That's the motto. I hope you enjoyed this small insight of why retail traders lose money. Don't forget to subscribe, like the video, and I'll see you all very soon.